This is the Voice of EB5 by EB5 Investors magazine. Each week, we sit down with experts in the EB5 investment space to get valuable insights and the latest EB5 news. Welcome to the Voice of EB5 with Ali Jahangir, your host. Today I have a distinguished guest, Paresh Karia. Paresh has a background in migration. He's a migration agent in finance. Welcome, Paresh, to the podcast.
Thank you, Ali. Thanks for having me.
Absolutely. So please give us a little bit of background about your history in the migration investment space.
Yeah, my history, my transition into migration space has been quite interesting. So, by qualification, I'm an accountant, I'm a chartered accountant, and have been in the banking industry for more than a decade. I was working on the private banking side. So, essentially, my job was to advise high net worth clients on managing their investments. That's where my experience of handling high net worth clients and understanding their finances, providing them solutions to meet their requirement comes in. And after spending more than a decade in banking, I've worked with private banks, I've worked with a Swiss bank for some time. And after that, I decided to move on my own. I started my own practice on the real estate investment advisory side. And we used to advise people on investment in real estate as well as alternative investments. And then we came across this opportunity of EB5. We were approached by through a mutual friend, was one of the EB5 practitioners in the US, and we started representing them over here in India. And that's how my journey into EB5 started in 2018. So I was a bit late in joining the party, but yes, even during the short period of time that I've been in the industry, I've been enjoying every part of it. And our beginning was quite interesting. It was quite good. It was pretty successful in the very first year itself. We managed to do deals in double digits, and that really gave a boost. And we started focusing along with EB5. Then we started adding more products. In 2019, 2020, we started doing the other investment programs. For US, we were looking at the L1 visa, the E2 visa. Thereafter, we moved on, adding other countries. We started looking at the golden visas in Europe, and we were the ones who to start the Portugal golden visa in India at a very early stage, much before others. We got into it, and we also started doing business immigration to Canada very selectively. And the last products in our portfolio that we added was the UK Innovator and Startup Visa Program.
Last time you and I met, we were in Mumbai. We were chatting about the typical Indian investor. And it seems like the currency's shifted a little bit. And also, there's not a booming economy worldwide right now. We're in a little bit of a dip.
Right.
What does that typical investor look like right now that's walking in your door? Because I know it's hard to get that money together these days to make the investment.
Right.
Who is this investor right now?
So typically, the kind of investors we are coming across are essentially all businessmen, large and middle-sized businessmen, first-generation entrepreneurs who have either set up their own business and their children are already studying in the US, and they are looking to settle their children in the US. Now, the children don't want to come back. So these are the typical businessmen who are hoping that after completing their education, the children will come back to India. But now they are realizing that the children are very happy in the US. They don't want to come back. And so they are planning to do EB5 for that. We also have clients who are essentially senior level executives with large companies, typically in banking and IT. So these executives have made their wealth through their ESOPs, especially in the IT and banking sector. Through their ESOPs, they have created the wealth, and their children are also studying in the US. And they are also looking at some kind of an opportunity of maybe not now, but later on moving to US or to some other country and settling there with their children. So typically, business owners and senior level executives are the kind of clients who are looking out for this kind of opportunities at the moment. The difference is that the business owners do not want to move out. They are not looking at doing it for themselves. The CEOs and senior level executives, those who are closer to the retirement, may be looking at it for themselves. But those who are still very actively engaged in their employment are not looking at moving it out themselves. They're only looking at it for their children.
I see. So right now, most of the focus is on the children, it seems like, and the professionals want to take send their kids there. What age are these children? Are they currently attending school in the US, or are they going to come out to the US?
Yeah, they are attending school in the US. Many of them are on OPT. Some of them have already completed that OPT and are now either on H1B or in the process of applying for H1B.
So they are, most of them are inside the US.
Yes, most of them are inside the US right now.
I see. And their parents have found you, or did they look up on Google and find you? How did this happen?
Yeah, so typically it is through their parents. Of course, the children themselves are also looking out for it, but the parents are ones who are looking out over here. They look out, they Google, they also come to us through references, existing clients through our network. And interestingly, I had three inquiries. Suddenly, to this today itself, just 1 hour back, somebody called me up from UK and he wanted to do it. So we keep getting inquiries from other countries also. We get a call. I got a call from Qatar a few days back. Somebody from Qatar wanted to do EB5. So it's not only India. We have had clients from other places as well.
So it's all over the place. Paresh, let's go to some of the recent TV shows you've been on. DC and NDTV. I'm noticing you're dipping your toes into the media. How'd you get involved in that?
Well, it's interesting. I've been doing TV shows for quite some time and I was in a real estate business. That's how I got associated with CNBC. And I used to do shows with them every regularly. There was a TV series called Property Guru where they would feature real estate experts. They would come and talk and give their views. So I used to do that show for them once a month. And that's how my connection with the media, with the industry, that started. And even after the post I migrated to immigration business, I started talking about immigration. I've been writing regularly for Money Control, for Times. I've been quoted in Times many times, and also writing for Fortune and Forbes. So I enjoy writing. I like to write. I like to share my knowledge. And off late, I've been doing a lot of YouTubing also. I like to create videos and put it up there on the YouTube to share the knowledge and information with potential clients and investors.
What else is good? Is have you noticed that a lot of people pick you up from TV? Have they have they heard you talk on TV? Do you get a lot of leads like that?
Well, not really. TV does not have that kind of reach when it comes to sophisticated product like EB5 is concerned. TV is more for mass. So you have to use the other channels. You have to look at the networking opportunities, the business networking opportunities, social networking opportunities, client referrals, etc., to reach out to the client. And of course, you also have to do a bit of digital marketing, but digital marketing really doesn't work that effectively because the segment that you are targeting, you have just a handful of clients, less than 1% of the total population of India would be qualifying for EB5 type of an investment. So it's like searching for needle in the haystack.
Yeah, no, you're absolutely right. It's a big investment and people have to save up for it and spend a whole life earning money. So let's go into some of the more detailed analysis here of choosing the right investment vehicle. When you look at projects, Paresh, what are you typically looking for? I know you and I spoke in detail about this, but I kind of wanted to broadcast this among our podcast. So what are you looking at in a project? What's your qualifications?
So typically, fortunately, I come with a banking and investment background, and we used to do a lot of alternative investments, real estate related products, private equity funds, venture capital funds, real estate funds, etc. So we used to do this due diligence way back in our private banking days. So some of the parameters, I mean, the parameters that I use are almost similar. We look at what is the track record of the developer, what is the track record of the regional center, what is the fundamentals of the project, what kind of project it is, in what sector, whether it is to what extent it is dependent on the economic swings. At the macro level, these are the factors that we look at. The micro level, we go down, we look at things like how is it getting financed, what is the cost, is it similar to some other project, what is the capital stack, is some bank involved, is there a senior loan available, has the project been appraised by the bank, by an independent bank, and how much money is coming from EB5, how much money are the promoters themselves putting into it, what is going to be the structure, what is the collateral, what are the repayment terms, what are the conditions associated with the repayment, and so on and so forth. So these are the parameters, the basic parameters that we look at. And then, of course, when we deep dive into the offering memorandum, we look at various technicalities, we go into the micro areas and we look at the financials and various other aspects before we actually go ahead and select the project for investment.
So, do you typically like projects that have already started construction or ground up? What are you looking for in terms of job creation?
Yeah, so well, that is one of the factors. Given everything else, other things being equal, project which is already underway is preferred compared to one which is on the groundbreaking. And this is also again more of a mindset from an Indian point of view, because Indian clients in India, we have had situations where underdevelopment projects on the residential side, on the construction side, have got stuck. A lot of money, people have burned their money in under construction projects. So Indian clients are typically averse to investing something which is just taking off the ground.
So, outside of the construction side, what do you like to see on the finance side? How much equity interest do you like seeing in these deals?
So usually I prefer equity of at least 20 to 25%. It all depends upon what is the overall structure, what is the size of the project. But the benchmark is there should be at least the promoter's equity should be equal to or more than the EB5 money. I believe that the promoters should have more teeth in the game than the EB5 investors.
That's great. So, what exactly are you looking for in terms of the stack? So, 20 to 25% sponsor equity. Are you looking for a project that has the senior loan in place already, confirmed by the bank? What's your typical capital stack look like that you like to invest in?
Yeah, it again varies from project to project, developer to developer, and size of the project, nature of the project. But yes, I would be very comfortable with the senior lender having a substantial stake in the project, which shows that the senior lender has the confidence, they have done the due diligence thoroughly, and they have approved of the project. So that gives you an added comfort.
The other question I have is I've recently seen some projects that don't have too much debt, that have little debt. How does that look to you guys as a project? When you see a project that's mostly in cash, is that tell you that the what does that tell you about the sponsor and the owners? Does it say, hey, they couldn't go find the debt? Or does it say, hey, they're more responsible to trying to lower their debt service for the project?
Well, being a banker, I would take a very conservative view on this. I would prefer, like I said, with a project, I mean, with more of a senior. The senior loan is more of a kind of a long term loan. It is more reliable. It is much cheaper. So I would definitely look at a project where the senior loan component is high. If the senior loan component is not very high, then that will mean that I will have to look deeper into it, do some more investigation to find out why they are not raising more senior loan. Is it that the bank is not ready to finance with them, or is it some other reason? Is it that the promoters have enough money to fund the project themselves that they don't need too much of a senior loan?
Yeah, no, that's interesting you bring that up. Do you ever see deals come through that have a mezzanine loan on top of the senior? Have you seen that?
I've seen that quite a lot.
What do you think of that when there's a mezz loan and there's a senior loan and then there's like 20 to 25% sponsor equity? Do you see that as a good thing or a bad thing?
I see it as a good thing because if there is a senior loan, it gives you a comfort, like I said. So if there is a senior loan, that looks good. Although I know that the mezzanine in mezz loan holders will stand below the senior in case of a default. It gives when there is a senior lender over there in place, it gives you added comfort. So I will be comfortable with that kind of a situation.
Very cool. So, what do you think is the key for planning and choosing the right investment for today's scenario? What do you think the key is for the planning and choosing?
Well, I think the key for planning and choosing is first we have to look at the macro level. We have to see in what sectors. We all know we are going through tough times. Interest rates are going up. It's becoming more and more difficult to raise money. So there are a lot of projects out there in the market to raise EB5 money. So we have to look at, I mean, we don't know what is the situation as far as a recession is concerned. So there is a possibility that, and the investment in EB5 is a long-term investment. It could take about 5 years, 7 years. So ideally, I would look at some sector which is more of a recession proof, not linked too much to the economy and not determined on too much on the economic swings. I would prefer something like a multifamily or an industrial project or infrastructure project with a small size project or something, a project where it is simple construction, some kind of logistics, warehousing, those kind of projects rather than complicated structures, which is something which is simple and easy to understand and equally easy to execute and sell.
explain to the investor. How is the EB5 scenario in India? How many active projects are there? Is there a lot of projects coming out there? Do you see a lot of people asking you for help?
People are asking for help, but surprisingly, not too much on the project side. So mostly the kind of people that I'm coming across are not yet exposed to too many projects. Those are the ones who are approaching to me. At least the kind of clientele I have are at the initial stage. They have just started looking out. Of course, their children might have seen a few projects overseas. They would have been in touch. The people who are here are more at the exploratory stage, trying to understand what is EB5 and how it can benefit their children, rather than they are not yet at that stage where they are looking at too many projects. So the scenario is quite different from what we had in 2018 and 2019, when there were too many projects, too many people who were at advanced stage. I think we have hit a reset post COVID, and now we are getting new set of investors who are coming in and they're relooking at this entire thing.
Where the most investors come from? Punjab? Where do you see most of them that your clients you deal with?
So most of the clients, yes, Mumbai does have a large number of Gujarati clientele, and these are typically businessmen and people from Gujarat. Essentially, I have a close affinity to US. A lot of them have their friends and relatives over there. So for Gujaratis, US is a preferred destination, whether they're in Gujarat or whether they're in Mumbai. So most, especially from the business class, they prefer US. So yes, we do have Gujarati businessmen from the manufacturing industry, from the real estate industry. They are looking at this options for their children. We also have, being in Mumbai, there are a lot of people from the financial sector, senior executives from the financial sector, people from pharma industry, people in senior level in the pharma industry coming to us. And the other sector that we are seeing is, of course, very close to this Mumbai, we have Pune. So in Pune, we have industrialists typically, and also Pune is an IT hub. So there are a lot of IT entrepreneurs who are looking at this kind of options. People who have built the business, developed the business, who are now looking at selling the stake and exiting out of it. So they are also the kind of people who are looking at typically moving to US with the children. But mostly people in Gujarat rely upon their friends and relatives who are already in the US. They will take their guidance, they will take their advice, they will take their reference, and they rely more on personal recommendations and references of people there whom they know in the US rather than professionals over here in India.
Got it. So tell me a little about your team, Paresh. Do you work with a couple of people in your office? Do you work alone? How's your team look?
We have about 10 members in our team. Most of them are based in Mumbai. We have a team member in Delhi, and we have 4 people in sales. We have 3 people in marketing, and we have 1 person in processing, 1 person on the admin, and 1 person on the finance side.
Nice. Do you typically have a lawyer that's from India that you work with, or which lawyers do you work with?
Well, we work with most of the reputed law firms based out of US. So typically all the large law firms which are there in US, we have worked with them.
And do they coordinate with you in terms of the 526s, or do you have a local attorney that does that in India?
So we coordinate with them. We don't use any local attorney. We coordinate with them. So it becomes easy for me to coordinate with the lawyers, because being a chartered accountant, I am very well versed with the source of funds. So most of the things on the source of funds side, planning of the source of fund, explaining to the clients the requirements, coordinating with the finance team of the client on getting the source of fund done, etc., is done at our end.
I heard there's a tax coming to get money out of India. When is that happening? How is that happening?
Yeah, so this has come as a big, setback for all those people who are looking at investing overseas. So in the recent budget, which was introduced in February, the government announced that they are going to increase the tax on when you send the money outside India. So India, as we do not have a capital account convertibility over here, we cannot freely remit money outside India. There are restrictions, and these restrictions have been there for many years. But somewhere when the Indian economy started opening up about 20 years back, so there were reforms, and instead of making the rupee fully convertible, they said that will make it easier for Indians to remit money outside India. So they introduced the scheme called the Liberalized Remittance Scheme. This was introduced way back in 2004. So, under the scheme that allowed Indians to send money outside India for certain purposes. So, earlier you could not send money outside India.
How much is this tax they're proposing and when is it?
This tax was first time introduced by the government in 2020. At that time, they put up a tax of 5%. So if you are remitting money outside India, the bank will deduct 5% tax and it will credit this money to your tax account. So it's not an additional tax you are paying. It's just that it's kind of a withholding tax. So tax is paid and you get credit for the same when you file your income tax return. So this became applicable from October 2020, and with 5%, it was not so much of a pain. Yes, I mean it increased the procedures, it increased the burden on the bank to follow the process and deduct the tax, but it was not so much of a burden. But now, what they have proposed is that we are going to increase this amount to 20%. Now, 20% is a huge amount for this kind of a transaction. So you will have to kind of pay 20% extra when you are remitting money outside India.
I see. So you got to pay 20% on top of the 800,000 to pull money out.
Yes. So, like I was explaining to you, under the liberalized remittance scheme, which was introduced by RBI to allow Indians to send money outside India, there is a cap of 250,000 per person in every financial year. So, Indian financial year is from April to March. So, in each financial year, per person can send out only 250,000 US dollars. So this was already making it difficult for people to remit money for purpose of investment in EB5.
How are people transferring money out?
Well, typically what they used to do was they used to spread it over the two financial years. So you just send some money in one financial year by March and some money in April. And the regional centers who are operating in India are very well aware about that. And some of them were giving that kind of a leeway to spread the investment over two financial years.
I see.
Right. So
Okay,
that
so
is the ideal way. Then there are ways of planning it. There are different ways. Like I've always been advising my clients, whomever I come across, I meet them, I would telling them that even if you have not decided to EB5 right now, if you are thinking about it, it makes sense for you to send money outside and then park it in a bank account so that in future, whenever you want to do an investment or you want to do an EB5 kind of a transaction, you have money available outside India to do it.
and there's no tax on top of that. So if you're spending 250, you're not paying a tax to get it out.
No, you are. So the
You
rules
are.
have now changed. So earlier, up to INR 700,000, which was coming up to about 90,000 US dollars, let's say, you did never had to pay any tax. Over that, you had to pay 5%. But now, if you are sending money out for the purpose of investment on whatever amount that you send, even if you send out $100 on that, you'll have to pay $20 as tax. So if you are thinking of sending out 250,000, that is a maximum one person can send, you will have to make provision for 300,000 US dollars, out of which 50,000, which is 20% of 250,000, will be deducted by the bank, collected by the bank as tax, and the balance 250,000 will be remitted. So to send 250,000 out, you need to have 300,000 in your bank account. That much liquidity should be available.
Have you ever heard of swaps at all? I know some countries have swaps. Is there any way to do, other means of getting the money out, or is it generally limited to this regime?
I've not seen anybody using swaps in India.
I don't know. 20% sounds like a lot, Paresh. It sounds egregious. Why is India doing this? Why do you think they're coming up with this policy?
That's really surprising. I mean, even I'm surprised why the government is doing it. The ostensible reason given by the government is that they want to track people who are sending money outside India without paying taxes in India. Right, so there have been cases where people have been borrowing money from their friends, etc., for the purpose of doing remitting money overseas. Now, if we look at this transaction, the way the entire transaction is done operationally, so whenever you are sending money outside India, you need to share your tax number with the bank, and the remittance is linked to your tax number. So through your tax number, they are checking how much money you are sending outside India. So the government already has the information about people who are remitting money outside India. They already have their tax records. So if at all they want to, question the people who are sending money outside India without disclosing enough income in the income tax return, they can always call for it.
Why are they preventing money from going out? What's the reason you think behind the governments? Have they mentioned this at all in the news?
No, they have not mentioned this on the news. Ostensibly, their reason was that they want to track the money going outside India, but that is already happening. But it seems that, yes, in a way, they are trying to discourage sending money outside India, and which I think is a retrogressive step, because this entire scheme, LRS, of allowing Indians to send money outside India, was a step towards making rupee fully convertible. And after 20 years, we are taking us to a step back by discouraging people to send money outside India.
Yeah, that's like discouraging people to have a global economy. Now, just out of curiosity, has this been going on for this 20% tax has been going on for a couple months or a year now? What's the
No,
timeline?
the 5% tax has been for 2 years now. It was introduced in 2020. The new announcement which has been made, it is a proposal in the budget. So this proposal has still not been passed in the parliament. So it is supposed to come into effect from 1st July 2023. So people still have time. Those who are thinking of sending money outside India, they still have time. They have time up till 31st March 2023 to send 250,000 outside India. Post 31st March till 30th June 2023, they can send another $250,000 outside India under the old provision. The new provisions will kick in only from 1st July 2023.